All right, everybody, if you don't know me, I'm Wes Bryn. Like Larry said, I own a few different LLCs here locally. And so what I've always tried to do is when people are talking to me about how I can make more money and where's the second job and things like that, my first question is, do you have an LLC? And everybody says, well, why does an LLC happen? How does that help me, right? It helps you by reducing your taxable income if you have an idea or an ability, a capability to be able to start an LLC. So I'll start right here. What is the number one thing that you want out of your LLC? Give me something. The number one thing.
Protection.
Protection, okay.
Limiting your liabilities.
Okay. What you got, Brian? All right. The number one thing for having an LLC is to make a profit. So when you come talk to one of these guys, that your tax guys, your CPAs and stuff like that, you don't have to ever have revenue. Now, if you don't, you're probably not running a successful LLC. You should probably do something else, right?
Well, you need revenue, but you don't need
to earn profit, right?
Yeah, it needs to be profit motivated.
Right. And so your number one motivation is to make a profit, right? But all that business development, all the people that you talk to, we'll get into some of the dinners and the mileage that you go to back and forth with people and everything else like that. Those things are all the things that are going to reduce your taxable liability for what you pay taxes on, okay? So my portion here, I'm gonna run you through a really rudimentary, step-by-step spot on how to form your LLC. And then I'm gonna hit a little bit on the EIN, but it's a Saturday, so the EIN website is closed on Saturday and Sunday, so you have to go through it on Monday through Friday. And so it'll step you through and it's the exact same process basically. You're just gonna take one piece from when you started your LLC for your tax ID, and you're gonna input that into your EIN and it'll spit out your EIN, okay? But we'll start here. So what do you do for a living? Medical device sales. You think you can do that as an LLC as well? 100%, right? The easiest thing that I talk to people about, well, I don't have this great idea. I don't have a patent. I don't have anything. I talked to a guy who sells HVACs and installs HVACs for a company, not his own company, right? I said, well, why don't you have your own LLC? He's like, well, I don't see how that helps me. I was like, do you think that you could get one person this year to pay you to repair or talk through or help them install their HVAC? He's like, yeah, I used to do 2 a month, but I would just do it, cash under the table, it's fine. I was like, no, because everything that you did up to that point to selling that product is a tax write-off that you weren't able to capture because you just wanted to be a friend and do it for $500. You can still do it as a friend for $500, but you're missing all of the tax credits and the things that you could have written off before that. Okay, so here's the easiest spot. Okay, so we're gonna go to Google. We go to Colorado Secretary of State. I don't care what state you're in. You have to go to the Secretary of State to start your LLC, S Corp, C Corp, whatever you want to do. Today we're gonna focus only on LLCs and what we do there. All right, so we're gonna go right into the Colorado Secretary of State. And I put this all on a PowerPoint too that I sent to Larry so he can step you through. I've got arrows, easy stuff. But this is the homepage for the Colorado Secretary of State. Okay, right here, second piece down, start a new business. Okay, everybody can see this okay? All right. Seeing how we're doing an LLC, you see all of these different ones, C Corps, partnerships, whatever you want to do here. We're gonna go right into LLCs, which is the second bullet down. Second bullet, makes it easy, okay? Now, a lot of this is repetitive. It's going to continuously ask for your address. What's your, if you're the person owning it, if you're the member, if you're the manager, whatever it is, you probably enter your address in 4 or 5 times in these 11 steps. So it goes really quick. You can do it in 5 minutes, okay? Just might be my talking that takes it to 7. All right, so we hit next here. This number one step, this is where, if you don't know what you want as a name, you can search their database on names and different things like that. You can find out if the name's already taken, if one's really similar, and then that's gonna hurt your marketing, strategies or something like that, right? You might not be thinking all the way through there, but if I say that I wanna open up Countertop Concepts, right? And then in here, somebody has Countertop Concepts CO for Colorado. Well, that's going to give him probably 20% of my business if I'm trying to push things out and I have the exact same name. So in here, you can kind of look through that. If it's not taken though, they'll just put you into the next one. So we're going to do one on just Dad's Inc. to get us through all of this stuff. Oh, sorry. Up top, it says you have to have LLC in the name, limited liability company, LTD, LLC, whatever you want to do. So you just need to make sure that that happens. Okay. Again, first off, it's going to tell you right away, and seeing how this isn't my computer, it doesn't auto populate. It's going to ask for your address. We're going to give them one. All right, mailing address. Again, this is your own LLC, so unless you've gone all the way down the piece of, I already have a building, I already have all these things, which you should have your LLC before you start making those expenditures, then you're using your home address, you're gonna use, it auto-populates, it's easy, it kind of skips you through everything, okay? Always use the post office one so that you get all the emails, or all the mail and everything else like that from the state that you may need. All right, step 3. Your registered agent. What is a registered agent? A registered agent is the person who is in control of your company in that state. If you live in this state and your business is here, you are the resident agent. When I lived in Virginia, I had a Delaware LLC because it had 0% sales taxes, and I wanted to save on sales taxes and the taxes I was paying at the end of the year. But I lived in Virginia, so I had to hire somebody who was a registered agent, which is a law firm in Delaware, and that was costing me like $1,000. But here you would put all of their info. Here we're just putting our own info, individual, super easy. Address, again, we're going to use the same address as I am, so it just keeps asking for it, right? Mailing address. Has the above person agreed to it? Yes, that's me. I'm starting up an LLC. We're good to go. All right. Here's a piece that I learned here maybe 5 years ago. Members and managers. You're starting off your own LLC. You are the manager of your LLC. Okay? That means you have sole decision making and everything else until you nominate some other manager or a co-manager or whatever else. Now you can bring in investors if you want to, and you can give them membership shares and a membership vote in your operating agreement, but you don't want to give up the manager title unless you want to be absolved of that fiduciary responsibility. Okay? So you're running the shots. Right now it's only going to be the one-man show in medical device sales. Cool. That's you. All good. So we're going to click on managers because there's one or more persons. That's me. There's at least one member. I'm a member and a manager because it's my LLC. Okay. Moving forward. If you move on to where you have multiple LLCs and you're getting into things for protection, okay? The way that let me be careful with my words. A way to protect your home, your family, your businesses and things like that is through a trust, through another entity. So as you start building your empire, you're going to start building this in separate LLCs, right? Talking to a guy last week, he owns 9 different houses. He has 9 different LLCs that report to a holding company LLC that is housed in his trust. Bankruptcy on one or foreclosure on one doesn't affect the other LLCs, okay? That's how you start protecting. Here, we're just the individual starting this LLC, so it's easy. We don't have to say the trust does it, but as you get further on to the protection mode and what you're gonna do, that could change what you wanna do in future LLCs and who owns that LLC, different things like that, okay? So again, same, we're just redoing stuff here. Address again.
So, he mentioned earlier, EIN is a lot like this. When you go to do this process, having a notepad with your address where you could just copy and paste will make it a lot faster.
Yeah. Sorry. So again, a lot of this is repetitive. It's saying, do you want to add another person? Nope, I'm clicking next. Do you want to add any additional information? In here, you can say, hey, I'm also doing sales and management consulting in medical device sales. Totally fine. You can add little things in here because the Secretary of State it can kick you out your own articles of incorporation that you don't have to do or anything else like that. In here, you're just housing that so they put more information. I've never done any on my LLCs. I've left it vague and broad for a reason.
Don't give more information than you have to.
Exactly, otherwise you're tied to it, okay? Do you need to attach additional information? Nope, I don't. Do you want this filing to take effect immediately? I was trying to think about this step this morning on why you wouldn't want it to take effect immediately. The only thing that I could come up with is, like, if you were signing a lease on said date or doing something, you know, in a different year, you're January 1st, I'm going to start this, and it's Christmas, and I just want to get my head together. But there's no real benefit to pushing it out or anything else that I could come up with.
I agree.
Like, you start it now, that way your expenses can start now, or at least your deductions and everything else like that.
Well, you need this to set up the bank account.
Right.
So it's like, just set it up now. I could at least get the bank account in place.
Exactly. So I always hit yes to that. I've read it. It's the same person filing the LLC. It skips you through that step. It's really easy, okay? Like, again, there are 2 bullets on each one of these steps. It's super easy. In here, always sign up for notifications, because a year from now, I don't remember that my $10 to keep my LLC running is valid and what I need. And so when you miss that deadline, they charge you $50 to renew it, right? Just get the text message, get the email, type in your email, call it good. It's fine. You don't have to worry about it.
I'm going to pause you right there real quick.
Go.
So the Colorado Secretary of State will never mail you a letter telling you to pay for your annual report, ever. You sign up for emails, that's how they notify you. Can you imagine how many people have started LLCs at 3 o'clock in the morning thinking it's a good idea? The state's not going to send a letter out to every one of those. They don't care if your LLC expires. This is the only way. If you get one of those notifications asking you to send a check to a P.O. box in Colorado Springs,
It's a scam.
it's a scam. So this is the only way that they will ever notify you that you need to renew your LLC.
Is that accurate? $10 for what?
Yep.
Annually?
No, the initial one
It's
is
$50 to start it, and it's $10 annually to renew it, right? California is $800 to start your LLC.
Right.
So it's really nice here in Colorado. Start up 10 of them if you want to. It doesn't really matter.
Yep.
Right? Oh, Jesus. Your email sucked, Dave.
Okay. West Brain and Gmail, forever saved in my computer now.
Yes, sir. Okay, so again, the step is just to confirm. You complete the step, you confirm the step. It really goes really quick. This is just to confirm everything was right? That we put in there. You can review that, make sure all your addresses are right and everything else like that. It's just a once over review, okay? The next step is now they want their money, okay? So as you can see, it's $50 to pay. You can pay credit card, you can pay whatever. After this, and we'll stop here because I'm not going to start Dad's Inc. LLC, right? But after this, you're going to make the payment, and then it's going to say you're done. And the next page after that says, do you want us to print or send you a copy of your filing?
It's articles of organization.
The whole thing, right? Your copy of your good standing,
Right.
all of those different things. So you can print that all off on that very next page. You're going to need that because that filing number gives you your tax ID. Your tax ID goes into when you file for your EIN. Okay? Your EIN is what you need for taxes and for a plethora of different things. Your bank account, your everything.
Yeah, it's bank account, payroll filings.
It's a lot of stuff.
Tax filings.
So we're going to cancel this, and I'm going to move from here. But first, I'll pause. Any questions on how to start your LLC or anything in the process of starting that LLC? Go.
So, for example,
Yep. So the question was, will the database see, if you have Dad's Inc. CO, or if you just wanted Dad's Inc., would it not allow you to because there was already a Dad's Inc. CO or vice versa? As long as the name, whether it's one letter, one space, whatever, is different than whatever's in that database, they will allow you to do it. But that's why I say, if you're coming up with, and in my PowerPoint, I say coming up with something creative, right? My government business is Creative Energy Consultants, and it's spelled CRE8IVE, right? So because that was a big thing, being ideating and being creative in like 2010, 2012 when I started up the business and things like that, right? And so If you're doing something like that, I'd go into the search database for businesses, which is on that first page, and just see what's out there for whatever your idea is and see what's close and if you need to modify anything.
Does it show you the similarities?
It'll show you everything that's in the state of Colorado under whatever you're searching for. If you search Dad's Inc. in that search database, it'll give you the none or the 10 that are Dad's Inc. CO, Dad's Inc. LLC, whatever it is.
It'll also give you the ones that are expired. So like
Yep.
if I type in mobile tax, there's like 15 different ones that show up. And some of them were Mobile Tax Inc., some of them were Mobile Tax LLC. And so, but many of them had been expired. They didn't renew it, so.
So I got a question.
Yes, sir.
So you pick your actual LLC name, but let's say you wanted a DBA trade name as well. You stick that in.
Same spot. It
Yeah,
was just
same
right
spot.
underneath
There's a question in there. You can put that into there. You can also file something afterwards.
I think it's actually on the EIN is where you do the doing business as.
Yep. Yeah, it's there too. It's also on your W-9. On your W-9, when you give that to people, you put Dad's Inc. doing business as Ed's medical device sales, whatever it is. So you can hand that out to everybody too.
What were you saying?
The trade name is a separate activity. It's a lot. It's you go through the same dashboard. And you go in documents, or it's got a little deal that says, hey, file a trade name, and that's where you start with that. So before you put it on an EIN, you've got to file a trade name for the Secretary of State.
Yes, that's correct. So on that first page where I said the second thing down was start your own LLC, whatever. If you notice, the one right next door to it was trade names or was partnerships. The one below it was trade names. Then it was corporations, different things like that. So that first page will send you to the link that you want to whatever you're trying to do.
And you can do that later. You don't have to do it.
Correct.
Right.
Correct.
Right.
Any other questions?
So once you
Did I repeat that question? No? So the question over here was where do you put your trade name and if you're trying to do business as? So if I have mobile tax and I want to do business as Dave Fortney's mobile tax, then that's done at the EIN piece. And it can also be done on, I think it was step 5 there where it asks for additional documentation. You can put that additionally in there or file the trade name that you file with your LLC into that when it asks for additional documents. There's multiple places where you can use that. But still on the Secretary of State website, they have a trade name and a trademark piece there where you can file all that information. Cool? Anything else? Go ahead.
Day one of your LLC, does that require you at the end of that year to then file taxes through just whatever your LLC is, or do you do it under your personal, like would I do it under my own personal taxes and then add the LLC in my personal taxes?
So the question's, once you file the LLC, do you have to file a separate tax return for the LLC?
Correct.
Or is it continue to file underneath your individual return?
Yes.
Bit of a complex question because it really depends on the situation. In general, what people do is if they're just starting a business, it's technically considered a sole proprietorship, even though it's an LLC. That then goes on a Schedule C on your individual tax return. Now, the only time in which you would create an LLC and then file a separate tax return is if it's a multi-member LLC. That's a partnership. That would go on a 1065 and then flow through to your individual. Or if you immediately elect to be taxed as an S corp, that goes on 1120S, and then that flows through to your individual.
The only time that I can think of where what you're talking about would happen, where, hey, I just wanted to kind of stay there and not file taxes with it, I think you still have to file a piece of paperwork with it. But if you had no revenue, no expenses, no deductions, no anything, and you just started the business just to kind of hold the name, but I think you would still file something under your...
That.
Right, that's what I'm saying. That's
Yeah.
the only time that I would think
Because
that you would
the
not file
LLC
anything
is
is
at a
if you're not doing anything with it. And then
Right.
why'd you waste the $50?
Yeah, the LLC is at a state level, the tax filing's at a federal level, right? So we can maintain that LLC, and I mean, you're going to have the expense, $50
Right,
at the very
yeah.
least.
Yeah, so
You've
you
got
want to
that
write off the
expense.
$50.
The thing is that, if you're filing tax returns with zero revenue and only expenses, that's easy for the IRS to, if they want to pick out returns to audit,
Yeah.
that's just an easy red flag for them.
Yeah. But I'll tell you, I mean, you don't have to do too much revenue. I mean, I started with some of those pyramid schemes, right? When I was in the Air Force, making like $15,000 a year. And like, I would sell toilet paper to these people and be like, hey, you should get into this. And this is where you can buy it. And this is how you can make money. Dude, I made like $1,200 in that year. But I also wrote off like $20,000 of mileage and going to people's houses, giving the briefings and trying to get people into this, everything else. Wasn't a great business model. We all know those pyramid schemes and things like that. But what the core piece that it taught me is how to write off my deductions and not have to have a $100,000 business where I could only write off some and then I'm still paying taxes and different things like that. It really showed, because that $1,200 came off my 20 grand. We're just using, easy numbers here, right? And so that $18,800 loss flowed through my Schedule C. So if I made $15,000 in the Air Force, I just got an $18,000 write-off. I paid 0 taxes that year. And I got a refund check, or I adjusted at that time. You could adjust your dependents and your deductions on your W-4. And so I would be like, well, I'm claiming 10, so I get more money in my paycheck right away. It's a little bit different now. Dave might go into that. That might be on the advanced class or whatever. But there's ways to like reduce your taxes and also see that in your paycheck right away, which kind of flows back to what I was telling you earlier. Why are we starting this? To reduce our taxable income, but also give you money into that. There are things that Dave can go over at a high level that when you start your LLC, you can work with Justin Conkey if you want to and start a SEP IRA. And now instead of contributing $23,500 into your 401k, you can contribute $68,000 into your 401k. There's a huge difference, and all of that is a write-off. So you keep all of the money to yourself, at least up to that point, without paying taxes, right? Every dollar that you were trying to put in a Roth IRA, an IRA, just the stock market after that 23 grand, you're still paying taxes on that, right? Or you could be putting it in a SEP that still goes into buying that same stock that you wanted and write it off on your business. That flows through to your personal, reducing your taxable income.
A good example of what he's talking about, where you have a business that has revenue, but they're showing a loss. The one that I see a lot is Uber drivers or Instacart drivers, because the percentage that they get off of that doesn't cover the standard mileage rate or any additional expenses that they have associated with it. So it's not to say that that business, because they're not showing a profit, isn't profit motivated. It's just that the way that business is operated, it's showing a loss every year because they're essentially trading their car for money when they're doing that, the wear and tear on the car and everything. So
yeah, that's a good example.
Not to say they don't all have to have a profit, but they should have revenue at the top line.
That's a fair point. All right, so I'm going to hit this for maybe 2 more minutes, and I'm going to turn it over to Dave to talk about taxes, because that's really the meat and potatoes of where we want to be. Everybody's cool with how to start an LLC. Super easy, $50, $10 to renew every year. Sign up for your notifications. All good? Cool. EIN is your next stop. I hear this every time somebody inexperienced tries to start an LLC. They typed in EIN into Google. They want to start their EIN. They're trying to do the right thing. There are 3 different sponsored links right here. And they're like, oh man, it was going to cost me $250 to start my EIN. I don't understand. You told me it was only $50 and everything else was free. So when you go to some of like any one of these 3, this IRS tax number, the US tax filing, all of those are costs. They're like, I don't want to say it's a scam because it's probably a legit business, but there's no reason to do that.
There's
Keep
just
scrolling.
not value there.
It's just irs.gov. You go into irs.gov. It tells you exactly how it works. There's a big bright blue button that says apply for your EIN. This is where you apply for your EIN. It's completely free. There's no cost to it, and it takes literally 2 minutes to complete.
Well, for you.
There are 5 steps. Well, I mean, you just set up your LLC, so you have all the information.
Yeah.
It's your name, your address, your tax ID, and then
3 different times.
And then it's like, it's like, are you an LLC sole proprietor, whatever? You click LLC, and the next step is it's done.
Yeah.
So
I agree.
Big piece there, and like I said, it's unavailable today, but big piece. That blue button is where you start it. Don't fall for the sponsored links or anything else like that. I can walk this through, and I'll probably put it into the PowerPoint that he's going to send out. I just couldn't get there Saturday morning. Sorry, I just got back in country. So, questions on that? I know it's really high level, but it's pretty easy to step through. Five steps. It's really easy.
Yeah. When I work with my clients, So I host a small business workshop. With that, they get 1 hour of my time. And then with that hour, we go and we set up the EIN, we set up the LLC. We also go through the Castle Rock business license, and then we go through a small business resource. We can do all of that in an hour. So because I'm actually having them do it, I would say the LLC on average has been taking them about 15 minutes.
Sure.
And the EIN has been taking about 15 minutes as well.
There's questions in between it and stuff
Yeah,
like
because
that.
they don't know
Hopefully
exactly what it
Hopefully
is.
this gives you a good
Yeah.
overview and things like that. He's going to get into taxes. That's going to give us a really good high-level overview. There should be a lot of questions through this, right? So one of the biggest things that I went through, probably I've had my CPA now for, I believe, 5 years now. For the first 10 years of owning LLCs, I could not find a good CPA. A lot of CPAs out there only want your W-2 and say you did this, cool, give me your mileage, give me, you want to write off your home office, different things like this. I wanted somebody who could challenge me and could say, this was the new tax code. I bet you spent money here. I bet you have this write-off. Why is this missing? I wanted the questions from a CPA. Dave does that as well, right? He focuses on really small businesses, some that have W-2s. He likes people that have an LLC with a W-2, right? He's helping them reduce their taxable
side
income,
business
and
is
they have their
usually
side hustle and
Yeah.
things like that on how to do that. Okay, so just ask a lot of questions, ask a lot of stuff on where your write-offs can be, what your write-offs are, what high-level stuff is, how it flows into your personal, and then we can kind of answer those, especially as you start seeing your tax brackets. I mean, you can save 10% on every dollar after a certain point, 8% on certain dollars. Like people that are somewhere around the $80,000 mark a year, you can get into a 12% tax bracket. Right? If you're at 140, you can get into a 22% tax bracket and not at the 34% tax bracket. Like you're saving a lot of money. So all these people that are trying to be like, do I need to go drive Uber? Not really. This is the way to do it. So ask a lot of questions during this section. Cool? Yeah.
All right, guys. All right, thanks, Wes, for
Yeah,
putting
man.
this on and for getting us all here together today. This was his idea along with Larry, so I
I
really
forgot my
appreciate
beer.
it.
I'm wearing the happy hour shirt and I forgot my beer. Come on.
I also want to preface that we're all going to be in very different areas of our business, right? Like Wes, when he was up here, he was talking about deductions. For my business, the stage that I'm in my business, I care about profit. I want as few deductions as possible so that I can maximize my profit on the bottom line because of the way I'm trying to move my business forward. So don't think of it as a right or wrong. Think of it more like a spectrum, and we're all going to be in different areas of that, and we're all going to have different goals with our business, and that's going to affect how we kind of approach this starting of a small business. So just keep that in mind as we're going through this. Just quick intro on myself. So I graduated from Metro State University in 2015. I worked at Liberty Tax for 2 years, and like any good entrepreneur, I thought I could do it better. So I started my own business, and I failed miserably the first couple of years. However, I learned a lot during that time. And in 2018, Mobile Tax was founded. In 2022, I had acquired enough business to where I could quit my full-time job with Comcast as a revenue analyst and do tax preparation full-time. So this workshop, usually where I'm posting this, the idea is to maximize profit for a company. And keep in mind, everybody's goals are going to be different. So Wes already went through the compliance portion, so we'll skip that. And then we'll get into the tax implications. So I'm going to start with a Schedule C. So when most people start a business, this is where the information goes, is on a Schedule C. And you can see on the top left, it says Form 1040. That's your basic federal tax form. And so this will then flow through to other income on your tax form. So it's really easy. Like this is all the same stuff you just filled out for your LLC, right? Name, address. Accounting method, it's going to be cash. When you have an accountant and a tax attorney and a bookkeeper and you have a big business, then you can start looking at accrual or others. But in this case, we're going to look at cash. Material participation is just if you're the person that is mostly doing the work in the business. And then as far as if you made payments that require a 1099, if you pay a contractor over $600, you're required to issue a 1099 to that contractor. Because if you're taking the deduction, the IRS wants somebody else to claim that income. And so that's what the 1099 is. All right, this is how you will request information if you're paying a contractor. So this is a W-9. It's a request for tax payer identification number. This is going to be hard to see on this screen here, but we can see right up here on box 3A. It's got individual, sole proprietor. It's got corporation. It's got S-corp, partnership. And then after that, we have LLC. Which box do we check? That's what everybody thinks, right? Why does the IRS have to make it so damn complicated? What it says under that is LLCs are reserved for corporations, S-corps, and partnerships. If you are filing this and you're not any of those, you're what's considered a disregarded entity. A disregarded entity is a sole proprietor. So we would actually click the individual sole proprietor box there. And then this is why it's important to have an EIN. Because look at part 1. Either you can give this person your social security number, or you could give them an EIN. I think we'd all agree we'd rather give them the EIN. So that's why it's important to set this up before you start business. Any questions about this? No? Okay. Moving on to profit from the business. So we've got gross receipts, and then depending on your industry, you may be into cost of goods sold. That's somewhat of a complicated accounting matter, and so I'm not going to dig too deep into that for just the sake of time. But essentially what happens is you got your revenue, and then you got your cost of goods sold, and then you'll have your revenue after that, so gross revenue.
Question, do we need to keep receipts for everything nowadays?
So I tell people that there's a good, better, best, right? Does this make sense as a business expense? Yes, okay, we can use that. Often I go to my clients and I just tell them, hey, I just need totals. But what's better than that? Better than that is if not only does this expense make sense, but I have a bank statement and a corresponding date on my calendar that relates to that expense. And then best would be a detailed log of exactly what was spent and exactly what day it was spent and the business purpose behind it. So
the reason why I asked that question at this point, right? This can get complicated, and you're like, man, do I need to be like my mom, saving the check receipts and like all the receipts in my box and stuff? I pay $64 a month for QuickBooks to do the best and say each line item, this is what it costs, this is the tax deduction that it's going to go towards, whether it's my vehicle, whether it's meals and entertainment, whether it's whatever it is, and then that spits out balance sheets and things like that. However, just like what he just said, you have a bank statement. This is 2025, you have a bank statement.
Right.
That is your electronic receipt. You can pull that monthly bank statement if you ever get audited and go line by line with that auditor and be like, yes, that Fuzzy's Tacos for $30 was my meeting with Dave to go over Dad's Inc. And I know I can write off $15 of that $30 expense. Right. Here it is, the date, time, and everything else like that. I don't care if it was on a business card, your debit card, if I paid cash. Cash obviously wouldn't be on the statement, but you know what I'm saying? So you have a detailed log about that. So don't try to be like, oh shit, I lost all those receipts. You have them in your bank statements.
Don't come to my office with receipts. I won't. It's great that you have them in case you're ever audited. But I'm looking for somebody that's got a system in place, whether it be an Excel spreadsheet. I don't necessarily like QuickBooks because they're like, hey, sign your people up. And then they let my people know they can do their taxes for them. That's just rude. So I'm not a big fan, but yeah, I mean, whatever system you have that gets you to fill it out. That's what's most important, is what will you do to make sure you record it? Because when you start getting into IRS case law, every one of them is determined based on the documentation that you have. So, all right. People will ask me if they need to report all their income. I mean, the answer is yes. You're asking a professional tax preparer, you have to report all your income. I do think that there are some benefits to reporting all of it, especially in my case, because I run reports constantly on my revenue versus my expenses. And if there's revenue missing from there, that as a business owner, that gives me inaccurate information. And so I feel like it's easier to make business decisions if you record everything. I think there's way safer ways to reduce your tax liability. Wes was talking about an IRA. That's phenomenal. People will come to me and say, hey, I'm gonna set up an LLC and then I'm gonna put my house in my LLC and then I'm gonna rent the house back to myself, but then I'm also gonna have a portion of that I'm like, dude, do you have a SEP set up? No. Okay, let's start with that. Let's start with like the easiest way to reduce your tax liability, and then we can get into more of the tricky stuff from there. So there's safer ways to reduce your tax liability. When you're running a business, the threat of audit is just really not worth it. And then you don't have to change your habits. I've literally had people come to me and say, I need to show more income this year. What does show more income? Oh, I'm applying for a loan in a house, so I need to show more income. So for me as a tax preparer and as an accountant, like, why don't you just have the normal habits and then you don't have to make those adjustments when you need to apply for a loan. And keep in mind, we're all gonna have different purposes for this business, but that's my general approach. Okay, these are the expenses. So we'll see here, these are the categories that you wanna kind of fill out as you're going through and recording your expenses throughout the year. The main ones I wanna focus on is the car and truck and the business use of the home office. So these are phenomenal deductions. The first thing I tell anybody to do when they are engaging me for tax preparation and they're starting a business, I tell them to set up their home office right away. And the reason for that is because it's one tax deduction that doesn't cost you anything. You're already paying for your utilities, you're already paying your mortgage, you're already paying all of that. So if we could take a portion of that and use that to offset some of our business income, then why not? It's one of the only ones that doesn't cost anything to implement. And then what that does is that establishes your tax home. When you have an office, you have established your tax home, and now you can start to write off miles from your home. If you don't have a home office, then Colorado, Douglas County, Castle Rock is considered your tax home, and any miles are commuting from there. Commuting miles are not tax deductible. And so that's why I always tell people to set up the home office first and then start to record your business miles for anything business related. You'll notice here there's limited expenses here. What's not up here that's really weird? Bank fees. Like everybody has like either a credit card processing system or some way to invoice that has a fee. And so that's what this other expenses is for right here. You can just fill out bank fees on here and-
Interest on your credit card?
What's that?
Interest on your credit card?
Yeah, there is a spot for interest, line 16.
So all the interest on your credit card that you're paying?
As long as they're business related purposes.
Do you go on?
I would recommend somebody to actually have a business credit card.
Sure.
Get the miles or the points or whatever it may be. And then those expenses will go here. Now your credit card payment doesn't go on here because we've already deducted it. But yeah.
Now your car and truck, are you going through like the mileage and that stuff here
I'll talk briefly about it.
Right
Yeah.
on.
Yeah. So yeah, that's my next slide here. So standard rate. So it's for 2025, it's 70 cents a mile. I'm gonna be honest. This is the one I usually use for my clients because the way this works is this is really easy to track your business miles. And then you have to own or lease the vehicle. You can't borrow your neighbor's car and then write off the miles on that. You have to choose this method the first year that you place the car in service. If you choose the other one, then you can switch each year. If you're leasing the vehicle, you have to use the same method for the entirety of the lease.
So can we pause there? Did everybody kind of quickly process how much money that write-off was? How many miles do you drive on your truck a year? Yeah?
I don't know.
15, 20,000? 20,000? So at 70 cents a mile, that's a $14,000 write-off. Now, I'm not saying you can write off everything because you, as the owner of your LLC, need to determine when you're working and when you're not on what LLC, whatever it is, right? You're being truthful and honest and everything else like that in your reporting. But if that vehicle that you're using is for business purposes from your home office to doing Uber, right? You turn on Uber in your driveway and you drive around, and that car is only for Uber, and you're driving 20,000. That's $14,000 that you get a write-off only on that.
Right. And some vehicles cost less than 70 cents a mile to operate.
And so
older vehicles probably going to cost more than 70 cents a mile.
Yeah, and that's the mileage deduction, right? Let's say you start a business and buy a new truck. Now, Biden changed some things and things like that. Under Trump, you could write off 100%, but then as Biden did, it was you could only write off a certain amount. But if your gross vehicle weight is over 64 or 6,500 pounds, you can write off 100% of that vehicle. Now, it's not 100% every year because you can only write it off one time. Okay. And last year, because of what Biden put in, he said that it was 60%, and then you could take 10% for the next 4 years for a 5-year deduction. Okay. But if your gross vehicle weight is over a certain limit, I think it's 6,500 pounds, like my Tesla is over 6,400 pounds, I can write that off. I wrote off 60% of that vehicle as a business write-off on that business because it's used primarily and only for business. On that. That's a huge write-off. You're buying a $100,000 truck, that $60,000 of a write-off last year was huge. So that's why it says number one.
Yeah, there's a difference between the actuals and the standard. Most of my clients, just to be honest, they use their personal vehicle when they're going to also do business. And so the standard mileage deduction is much easier. I usually will only discuss actual mileage with clients if it's 100% business use. And the reason for that is because to take this expense, you have to have your total miles for the year, and then your business miles. That's going to give you a ratio. And then you have to apply that ratio to every single expense. Your gas, your tires, your oil changes, and everything. So there's just a lot more record keeping. And if you're really only using it for 10% business, how much is all that additional record keeping really going to save you at the end of the year?
Yep.
So we kind of compare your time and what that time is worth. I mean, if you could go out and make a couple more sales instead of recording every gas receipt, you're going to come out with more cash in your pocket at the end of when everything's said and done. So yes, you can take depreciation as well. The one thing I would caution with depreciation is if you depreciate the vehicle 100% and then you sell that vehicle, you're going to have to repay depreciation for whatever you made off of that vehicle. That will now count as income. So just more record keeping associated with it.
Basically, he said buy a more expensive car because you're making more money in your business.
Yeah. All right. So this one, I actually have the opposite point of view on this one. So with this one, there's a home office deduction. It must be exclusively on a regular basis used as your principal place of business. Pace of business, I gotta fix that. Place of business. So kitchen table is not gonna be a home office, guys. Now, if you have an office where you're already working from home and you wanna start a business, evaluate, can you cut that office in half and make half exclusive for your business and half for where you work for your company? So it's not, if I work from home for my W-2 job, can I deduct my home office? No. If I work from home for my W-2 job, how can I deduct my home office? You can do that by splitting it in half. Make one for your business one. So think about that.
Make a separate office. Your spare bedroom now became your home, your LLC's office, and your home office is where you work from home for your W-2. Like, pick a big room.
Big room is great, for sure. The bigger the better. If you've got a basement, and you can cut half of that and make that your home office, absolutely recommended. And the reason for that is that when we do the simplified method, it's $5 per square foot up to 300 square feet. Okay, that's the deduction. They say they're already accounting for everything. When you do actuals, you get a ratio similar to what you did with the vehicle, and you're going to use that ratio and you're going to apply it to all of your expenses with maintaining your home. So your mortgage interest, your taxes, your insurance, your utilities, gas, water, electric.
Your internet.
Cell phone's a bit different. The IRS is kind of specific about that, but internet, and then also house cleaning, right? Is the house cleaner cleaning the whole house? Well, then we got a ratio there. There's certain things that don't count, which is like landscaping, and that's just because the IRS specifically calls that out when you go through that the publication that they have.
Unless you own a landscaping business and had to do it for your business to show people that that's part of the landscaping, and you use that for marketing material.
Yeah, I mean,
Just a quick question. You
Yeah.
said mortgage interest, but you're already, like, I write off my mortgage interest on my personal taxes already, so how do you double dip on that?
you don't.
Okay.
So what you do is if you have 30, let's use a smaller number, okay? Because what I'm usually seeing is, we'll say mortgage interest is 15K, okay? And let's just, for the sake of argument, say that your home office is 30%, 33.33%. So you would apply 5,000 of that to your business, and then 10,000 to your Schedule A. Now, what's happening is with the Schedule A and the itemized deductions for married filing joint, that's up to $30,000. Most people are taking the standard deduction. So you're paying mortgage interest. It's going on to the Schedule A, but it's not enough to get over the standard deduction. So why not take some of that and shift it over to a Schedule C where it's 100% deductible? So hopefully that answers. So the question was, if you're paying interest on your home, then why, and you're already taking a deduction on the Schedule A, can you double dip? The answer is no, you can't double dip, but you can shift that to one or the other depending on which is most beneficial.
And that is the point of why everybody's here today. Like, that is the difference in having an LLC and just doing it on your own.
Yeah.
If you're not getting up to that 30,000 for married filing joint and everything else like that, all the deductions that you're writing in there are free. All the stuff that you're putting on your LLC go on top of that $30,000 to reduce your taxable income.
I
So
tell
now
people all the
if you
time.
double that, now you have $60,000 of deductions on your $100,000 income, and now you're paying taxes on $40,000, not 70.
Yeah.
That's a huge. That is the crux and the point of this entire course right here. Oh, I needed more light. You probably don't want to see more of this.
Yeah, I tell people all the time, standard deduction's good. Would you rather pay out 15 and deduct 30? Or would you rather pay out 40 and deduct 40? I'd rather pay out 15 and deduct 30. I got more cash in my pocket at the end of the year. So standard deduction is good. We can use the business use of the home office to shift some of those expenses that are usually deductible on Schedule A. Now that might change at the end of 2025. A lot of the laws are set to expire. So we'll see how that changes. But that's why it's important to have a tax preparer that can kind of coach you through this. Okay, so that's business use of the home office, the difference between the regular and the simplified method. Just quickly getting into your tax brackets here. What I want to talk to you guys about, and so this is our progressive tax brackets. This is taxable income. So if you make 100K, you deduct 30 for your standard deduction, you got 70K. You're going to land in the 12, or in the, well, I say 12% because I mostly do married filing joint. But as a single individual, you'd be in that 20%, 22% tax bracket. So when you get to the 20%, 22%, that doesn't mean that all of your income is taxed at 22%. It just means the next dollar that you make above that is taxed at 22%.
Does that make sense? So from 47 to 70, that $23,000 is taxed at 22%. So it behooves you to have additional write-offs and deductions to stay at that 12% under the 47.
Well, it becomes more valuable.
If that's where you're at, because that's where you're saving that money, right? That's where you're saving that 22% on 23,000, 20% on 20,000, that's $4,000. Just automatically back in your pocket for starting your LLC and learning about these deductions. That's $4,000 that is automatically in your paycheck.
Two areas where I tell people it's important to get some advisory is when you go into that 22% tax bracket, because now you're making 90 cents on the dollar. And then when you go into that 32% tax bracket. Those are the two areas where I say that anything in between there is kind of marginal and may or may not be worth the effort. So, self-employment tax when you start a business, this is what gets everybody. Social Security and Medicare, together it's 15.3%. And then also on top of that, and that's bottom line, on top of that, it's whatever your tax rate is. So if you're in the 22% tax bracket, there's other deductions that go in there. So I say rule of thumb, 30%.
So I used to get burned on this when I was a basketball referee. and I didn't start my own LLC, and I just got 1099 from going and doing college games and high school games and things like that. Tell me why is it beneficial to have an LLC and do this rather than just doing a 1099 and not having your LLC?
Well, I mean, either way you can deduct it. So you're saying having an LLC, you can
The
still
deduction
take,
is different on the Social Security, whereas the business pays and can write off the extra 7.3%.
So if
instead of
you're on
paying,
an
right?
individual, you get to deduct as an adjustment half of the Social Security tax. You can do that as a sole proprietor. You just can't. If you're a W-2, your employer pays half. When you're the LLC, then you have to pay both parts of it. So that's where it gets tricky. And a lot of times in this, like I'll talk to people about job costing. Like if you don't work this 30% into your costing, like if I told somebody, hey, you did this job, it was $10,000, awesome. Good job? Yes, absolutely. Would you have done it for $7,000? No way. Well, you just did. So let's work this tax into our job costing so that we can make sure that we're making what we expect to make on it. Everybody's situation is unique. This is kind of a scenario that I developed. We could skip it if we want. I don't know how we're doing on time, and
It's 1:40. We got about 20 minutes.
we got 20 minutes. Okay. I like this scenario because a lot of people get kind of freaked out when they start their own business and then they owe tax at the end of the year. Here's the difference. W-2, your employer takes federal and state income out of your check before you get it. Your employer takes half of your Social Security, Medicare, and then your employer pays the other half. When you're self-employed, you get the money first, and then it's up to you to withhold the tax. Half of your Social Security is deductible. So what's the difference between these? You know, someone starts a business and they say, I used to get a $2,000 refund and now I owe $5,000 at the end of the year, so my business cost me $7,000. No, it didn't. It cost you 7.65%, and then you got additional deductions on top of it. The only difference is it wasn't taken out of your check before you got it. So it's more of a lack of planning than anything. So here's a case study that I go through. Okay, so let's say we got W-2, married filing joint, and together they're bringing in $160,000. Okay, Social Security and Medicare, that is taken out of their check before they get it, but it doesn't appear on your tax return, which I think is hilarious, but it's a tax that is paid. And then we've got your income tax at $19K, total tax is almost $32K, but they get a refund at the end of the year because enough taxes are withheld. Versus a self-employed, they then start a side hustle that makes them additional $20,000 a year. Okay, and I'm talking bottom line, $20,000 profit. They have Social Security, but now they have this new tax, the self-employment tax of $2,826, income tax of $22. It's higher because they've got more income, and then the total tax is $38, and now instead they owe $2,881. And this is that scenario that I was talking about. They say, my business cost me $6,000. I made too much money in my business. Can't make too much money in your business, but I get it. So what actually happens is instead of looking at the refund that you're getting, I want to know how much cash you have in your pocket at the end of the year. The cash that you have in your pocket after starting this side hustle, almost $14,000 more in your pocket that you have at the end of the year. You shouldn't be worried about the refund. You should be worried about cash in your pocket. Now, let's say we start this LLC and now we start to take advantage of the home office, the vehicle deductions. Well, we still have that money. We still drove those miles. If I got a second W-2 job, I would have to drive into work. So there's no difference in that. But because we took those deductions, now we have even more cash in our pocket because we were able to leverage those deductions that we have. So an extra $1,000 or $700 roughly. All right, so now let's say instead of starting a side business, you get a second W-2 job. So you still have more money, you needed more money, you got more money, but in this case, the cash in your pocket is more by $521 because you were able to write off your home office and your vehicle when you weren't able to do that. So people say, well, I get hosed at the end of the year. Yeah, you had to pay tax, but if you got a W-2, they would have taken it from you. And so shifting that mindset as far as this business is hurting me to then properly preparing and knowing that there's that additional tax when you make the additional money and planning for it ahead of time will help shift that mindset so that you don't think that this is a bad thing.
Right, and being smart with that money that comes back to you and not just going and blowing it in Blackhawk or something else like that, right? But being smart with that money, putting it in your SEP adds additional deductions to what you're doing, right? And so that dollar value goes even higher, right?
Yeah.
The less taxes that you're gonna pay, the more deductions that you have, everything else like that. I mean, just think about that from if you max out your 401k with your distributor at 23.5 and now you get 68,000, I mean, that's $45,000 more that you can keep to yourself rather than paying Uncle Sam in taxes, right? That's huge, okay? So like taking that extra $500 a month that you're not paying taxes because you're keeping all of it, you might be putting it away to pay taxes quarterly or something like that, but being able to keep it and then putting it in a SEP or putting it in your child's, I mean, we haven't even got, like, you can pay your kids $13,800 a year as a deduction on you and they don't pay taxes on that. Like, there are ways to make sure that you are reducing this liability and increasing the cash in your pocket, like what Dave said.
Yep.
Right? These are just small deductions with just saying like, okay, this is just home office and car, right?
Oh,
like,
there's so many more.
I think the number is something like, I think it's like 400 write-offs you have as an LLC owner to 9 that you have as a W-2. There are infinitely more possibilities and abilities to protect your home, protect your business, protect your family, and keep more money coming in from what you're doing.
Yep.
Okay.
Absolutely. Now, this is my favorite illustration of this. If you're working a W-2 job and I implement something at this job that allows my employer to increase their prices by 10%, how much more money do you think I see a year? None. But if you as a self-employed individual decide to raise your prices by 10%, that's all in your pocket. That is all in your pocket. We just got to plan appropriately for it. So that's why I like that 7.65% extra that you pay is easily made up with additional deductions like QBI, being able to take additional investments into your business or your SEP. That can easily be made up with proper planning. So that's all I have as far as the tax impacts of setting up a LLC. So, yes.
I love the information on what to do. What are like your top 5? Don't do this or you're going to have a bad day. Pieces of advice.
So the question was, I've explained what to do. So what's my list of don't do's? Well,
don't do anything illegal.
Yeah, but I mean, it's tough, right? It's tough because
don't stretch something.
Maybe don't post.
Don't try to write off your whole house.
Common mistakes people make.
I would say getting into things before they start with so just starting the business without attending something like this or talking to a tax professional. Because people come to me at the end of the year and I said, did you set up a home office? And they said, no. Did you track your miles? No. Like, these are all things that could have been avoided if they just talked to somebody before setting up their business. Like, I would say, realize that you don't know everything about it and seek out advice and help before just diving into it. I would say that's probably where I see the most people losing deduction, and just not having good records. Yeah. Not having a business bank account. That is a pain in the ass, man. Like, if somebody comes to me at the end of the year and they have to go through their personal bank account to find their business deductions, Walmart.
Yeah.
Oh man, was that business or personal? I don't know. Yeah. Let's just throw it on there.
The money that you're saving, I know he doesn't like QuickBooks. I love QuickBooks, but my accountant deals with it. I don't have to, but I go in there once a month and I'm like, hey, this was this deduction, this was personal, this was a shareholder distribution, whatever the case may be. But that $64 a month is another $800 write-off a year for me for that accounting software. and it helps me itemize every single line, and so it makes things flow and super easy.
I think you bring up a good point. When you make these investments, so I tell people to get a bookkeeper.
Yeah.
And they're like, well, a bookkeeper's expensive.
That's a
And I
write-off.
say, you're automatically getting a 30% discount.
Right.
When you think about that.
Right.
You are, if they say $100 a month, you're really only paying 70 because of what you save on the taxes on the back end. And I think that's a great point to illustrate.
Yeah, and you can look up you could go to Google and say what are the top 10 write-offs for an LLC, and you can come up with those, and that will significantly impact your W-2 and what you pay in taxes. Just knowing that and starting your own LLC.
Yep.
Right, and realize that one of the common things that people think of when they're starting an LLC is I have to get an Old North End. I have to open a restaurant. I have to have a Fuzzies. I have to have a baseball clinic place. Like, no, you can go and start your own medical device sales piece. That HVAC guy can start his own HVAC piece, right? He has the tools and the know-how and what he's doing. I can get hired anytime as a government consultant.
I love
right?
consultants.
I don't need to do anything but just get hired more.
Yep.
Right?
Yep.
And so I did that as a W-2. I could do that as a federal employee. I had to go through a lot of ethics stuff, but I could do that as a federal employee and still do side hustles and side work and stuff like that, and write all those things off. You don't have to have a patent. You don't have to have some brave new idea, whatever the case may be. If you're a landscaper working for a landscape business because you don't have the clientele yet, guess what? You can still have your LLC and help your neighbors and help all that. That's revenue coming in, that's profit coming in, and additional deductions that will probably surpass until you get big enough to be on your own and not work for the man anymore, right? The goal, just like what Dave did, is to work for the man, develop the tools. You have the tools right now. Everybody has a job here, I'm assuming. Even if you don't, you had tools because you're all mid-30s, right? Except for me, I'm like, late 20s. But you all have these tools, so take those existing tools and make an LLC for yourself. Like, you don't have to do something like over the top and crazy, right? If you're you could be a gym owner and just do training on the side until you have enough money to open your gym, and because you work at 24-hour fitness or because you like to work out. Like, there are very simple things that you can do. Just trust yourself when you're setting up that LLC. It doesn't have to be Bryn Consulting LLC is an LLC. We could just do that, and it's totally fine. And I can farm myself out to multiple sales and management consulting leads and everything else like that, right? He was a CPA, I'm sure, with an LLC while he worked
enrolled agent. I'm not a CPA.
Well, while he worked at Liberty, and probably doing his mom's taxes kind of on the side, right? And it grew up into something else. So that stuff's easy. Don't think too hard and too much into this.
Yeah, I agree. Owning a business isn't for everybody, but if it's for you, there's phenomenal benefits. Yes, sir.
So if I'm thinking of a small business and you don't recommend QuickBooks, which I think
I recommend QuickBooks.
He does. I don't.
Right. Right. What would you recommend? Because
I mean, how many transactions do you have? So the question was, if you are starting a business, and what would you recommend for accounting software if I don't recommend QuickBooks? So what I don't like about QuickBooks is that they always raise their prices, and they raise their prices, but they say, hey, we got these new features for you. Well, if those features don't help me in my business, then I just am paying more for the same thing. And so it depends on how many transactions you have, honestly. I still use Excel for a lot of
I was just going to say, I have an Excel spreadsheet with 14 tabs of travel and insurance and 401k and like expenses and everything else like that.
Yeah.
I mean, I'm happy to give that to you. I mean, it's just rudimentary. It's easy.
So this is what I'm working on right now.
Wave?
Wave's free.
Yeah,
Okay.
Wave is good.
They charge you based on if you send out something to get paid by credit card or bank transaction, they take a percentage. But the accounting software is free. And it's like
Gotcha.
QuickBooks.
So
I was like, okay.
This
Stop yelling at me.
is something that I provide for my clients here. So this is just an Excel spreadsheet, and it's got a profit and loss worked into it here. It's got vehicle expense where you can track your vehicles, and then it's got a home office expense here. So I mean, these are all the main things that I tell people to track. So my clients get access to this, and it works for them. I'm also working currently to develop this into an app. And so if For me, like I said, it's whatever it is that gets you to record it. If you like Wave and you record it in there, great. If you buy Wave and you don't record anything in there, I don't care if it's free. There's no value there. So whatever it is that gets you to record it on a regular basis. I recommend monthly. Some of my clients do it quarterly. I also recommend that one of the very first things you should outsource is bookkeeping. I know you think it's an expense, but the time it saves you, if you can make 2 sales in that time, it pays for itself. So, yes, sir.
Question for you. If you have a multi-member LLC,
Yeah.
and your wife is a bookkeeper, can you use the home office, the same room, as your home office for 2 different businesses?
No, it's got to be exclusive use. It might be
Exclusive use to the one or the
to
other?
the business. Yeah, that's the way it's written in the IRS tax code, is that it's got to be exclusive use to that business.
It's just like what he was saying earlier. You could split that home office in 2,
Right.
or make your spare bedroom the other office.
Yeah.
Like you can do that. You can do that. Think creatively. Like there's,
Just split the basement.
yeah. Split the basement.
Yeah, that's
Right.
that's what I would do. Absolutely.
They come and audit you. They're gonna ask for like a wall in between the
They're used to. There used to be a rule that your office had to be separated by a door, but that's no longer a rule.
With all the co-working spaces and all of that stuff that
It
kind
would
of
make
that kind of
sense.
went out.
Yeah.
I mean, your laptop could be upstairs in the kitchen and nothing's in your office, and you have the CPU in your other office. Bring down that laptop. This is where I work, and I sit on my beanbag, and kind of this is my chillax, workstation for this business, and that's okay.
Yeah, the main thing is just exclusive use. So.
Oh, another question. Sorry, just
Keep
Yeah,
it
you're
going.
good.
I wrote it down.
This is the question time.
Are referrals tax deductible? For example, I work in concrete and I have landscaping buddies, and if they're out doing mulch, if they're out doing grass, and they get asked about concrete work, I'm like, hey, I got a guy, and I tell my contacts, hey, I'll give you $100, $150 for every referral.
Yeah. So the question is, if you work in a business and you pay somebody for a referral, can you deduct that? Yes. I would put that personally under advertising.
Advertising.
Yeah. Because that's part of your advertising marketing plan is to pay referrals.
Yep.
And so that's where I would put it.
And that's to pay. Are you talking about receive or to pay?
To pay them.
Yeah.
For you to pay them.
Like,
Yeah.
I'm going to give them $150 for the referral.
Yeah, that's advertising for you, or a
Advertising for sure.
consulting fee or something like that.
Yeah.
And as long as it's not over $600, you don't have to give them per transaction. You don't have to give them
It's total for the year.
Well, but if it's different,
Yeah.
like he referred a concrete guy and he referred a landscape guy and he referred
Correct, yeah.
right, like so as long as it's not over $600, you don't have to give them a 1099.
Yeah.
And there's over $600 for that person for the year or for that
Correct.
job?
For the year. Yeah.
All right.
What
That's
else?
another question.
Yeah, go ahead.
If you had a car note prior to starting your business, and then you happen to use that vehicle, the car is still.
Ha! We were talking about this right
Yeah,
beforehand.
the car is, is my personal name, not in the business name.
Right.
But I use it primarily for business now. Can I? Is that a monthly note?
So your monthly note is made up of 2 items, okay? There's the principal payment, and then there's interest. And so let's just say that in your case, it's 100% business use, okay? Car note's $500, you pay $300 in principal, $200 in interest. So when you received the loan for that car, you did not count that loan as income. Therefore, when you repay the principal, you cannot deduct that. But the interest portion, absolutely, that would be a deduction under interest on that Schedule C.
But that's only if you deduct the car on actual and don't
Correct.
use the mileage, because you can only use one
Correct.
or the other. You can either use the mileage deduction, or you can use the actual, which is the depreciation,
Right.
your tires, your insurance, your interest. You had to replace. What do you guys call those? I drive a Tesla. You have a spark plug or something like that.
Yeah, something
you
like
replace the spark plug. You use that
Change
thing that you
the-
have to go and waste your time at, like that gas thing.
Oh, and
I go
the
get a candy
oil
bar or
thing,
something like
right?
that. You do the
oil
oil
thing,
things
yeah.
that you guys do. You can deduct that, like those things, right?
So we'll get back to your other questions. Does anybody else have other questions, or can we keep going over here? Yes, sir?
Yeah, so as you mentioned, a lot of us started a side hustle before we turned it into a business.
Yes.
So we already got the computers, the tools, the resources, some inventory. Is there any way to transfer those over into the business, or do we just take that L and move on?
Well,
How long ago was it?
It varies, but I mean, to your HVAC guy example, right? So HVAC guy has always been doing HVAC work on the side. He may have even been a 1099 contractor before he was W-2, so he had to buy his own tools anyway.
Yeah.
Right. So anyway, now he's finally decided to go out on his own.
So it gets complicated. So if we buy a computer, let's say we spend $1,000 and we use it for personal use, and now we're going to start using it for business use.
There's a depreciation over 5 years. The
depreciation's
$200.
over 5
So now
years.
you can write off $800 of it, not $1,000. You won't be able to write off the whole thing. I would say if you bought it like
it's supposed to be preferential. Like there's supposed to be a ratio associated with it. I would say honestly, for most of my clients, I would probably say buy a new computer, and then we could write that off if that provides a benefit. If not, then forget it. What's the time and effort of going back and finding that and then evaluating how much of it was personal use in that time versus business use?
Yeah.
So
I'll give you a specific example. So my wife's a photographer. So
Okay.
She's been doing it on the side. She's got cameras, lenses, lighting equipment, props, etc. So again, how is there any value of her trying to translate that?
that
into
I
business?
absolutely would. Yeah, because
it's
those
for
are all the
personal
tools.
use for,
Yeah.
giant
Absolutely, absolutely. I would.
So I would like you have like the letter of the law and like what we were talking about earlier, and then you have the interpretation of the law and the code, right?
That's why there's court cases.
In my mind, as long as you're being reasonable for the expenses that you're doing, you didn't buy that camera 10 years ago, you bought it within the last year or two, something like that. You just starting your LLC. This is what you're running. Like this is the maintenance that you have on that camera and the lighting and the cords and the everything else like that. Those are all write-offable things. Now, like you can go to the letter of the law and say, nope, you didn't buy it as of this date, but that's all business use. You could also write yourself a note, right? And be like, okay, well, Rachel Smith is selling this camera to Photography Smith LLC.
So in this case, they're the same because we haven't set up an S corp or a corporation or anything like that.
Right, but I'm saying
So
like
they're the
if
same,
you
but-
can go down the track, but I would say as long as you're being reasonable in your stuff, you don't need to hover the gray line too much right now. You're just starting your LLC, right? As long as you're being reasonable in your transactions and tracking those, don't go 2 years back. Don't go a year back, right? Be reasonable in your transactions and you'll be all right.
Yeah. Yes.
Say I'm flipping cars, right? And I assume I could write off my garage space at that point as my office.
Yes.
What if my garage is full of stuff and I'm doing work on the driveway? Does that matter?
Yeah, that would matter. You would want to make space in the garage for that because
So I would
the driveway doesn't have.
I would go a different route. I would say that you're doing that all wrong. Your office is inside of your house. You want that right off, and you're renting a storage unit for your car that costs $2,000 a month, and your note for that is that. You write
Yeah.
off the $2,000 and you write off your home office.
I would say buy a shed to put all that stuff in, and start working on the cars in the garage. That's a great deduction. The garage is a phenomenal deduction. So when you add that to the overall space, it's